Good day. Welcome to the PSG World Offshore Performance Overview for July 2025. Markets rallied in July. The MSCI Acqui ended the month 1.36% higher, while the MSCI World was up by 1.29%. Emerging markets outperformed slightly, posting a 1.95% return. The S&P 500 was up by 2.2% over the month, while the FTSE 100 was up by 4.3%. Asian markets were up over the month as Hong Kong equities were up by 3.1%, while Japanese equities were up by 1.4%. Global property fell by 81 basis points over the month. Sovereign bonds were down by minus 1.8%, while investment-grade bonds were down by minus 1.4%. Emerging market bonds outperformed, posting a positive 0.9% return. Over the month, Aberdeen and Threadneedle appeared amongst our top performers, while PIMCO and MFS were amongst our bottom performers. 7 funds were included in our quantitative radar. We have 9 funds in our qualitative radar. These include the Fidelity Global Multi-Asset Income Fund, 91 Global Strategy Managed and 91 Global Macro Allocation Fund, Veritas Global Real Return, Net Group Global Equity Fund, and the Goldman Sachs Global Equity Fund. The Global Preserver Fund of Fund USD class underperformed the sector by 1 basis points, with 2 out of 5 managers outperforming. The GBP class outperformed the sector by 2.68%, as all 5 funds outperformed. The short-term volatility led the rankings lower. The USD class is in the second quartile over 3 years, while the GBP class is in the 4th quartile. The Global Moderate Fund of Fund underperformed the sector by 50 basis points, with 1 out of 6 managers outperforming. The fund has managed to produce second quartile performance over its 5-year recommended investment period. The Global Flexible Fund of Fund USD class underperformed the sector by 51 basis points, with 1 out of 7 managers outperforming. The GBP class outperformed the sector by 1.64%, with 5 out of 7 managers outperforming. The USD class is in the second quartile over 7 years, while the GBP class is in the first quartile over 7 years. The Global Creator Fund of Fund underperformed the sector by 31 basis points, with 5 out of 10 managers outperforming. The fund is in the second quartile over its 7-year recommended investment period. The solutions continue to produce consistent first and second quartile performance over the long term and are performing relatively well over their recommended investment period. Looking at our 3-pillar approach, even with the volatility this year, the team are still achieving their objective of delivering consistent, above-average performance at below-average risk while maintaining a competitive price. Thank you.